Well, have you been thinking about diving into the investment market when it comes to property and real estate? If you have, we have some things that we'd like to chat with you about. Victoria, I know a lot of people are worried about the stock market, worried about interest rates, worrying about what to do with their money. You have some reasons why real estate investing might be the way to go for them.
Absolutely. So markets are very volatile, as we know. Real estate market's also very volatile, right? However, investing in a hard asset like a multifamily building or a multifamily unit really can hedge your bets against those declines in the market. And the reason why is it's a hard asset and it brings in rental income. It actually brings in income. So if you make a good investment with a multi-unit, you can see it as sort of a mini 401k and you're investing in your future. Another way to look at it is if you actually plan on living in the unit, that is even better because you can use 75% of the rents applied towards the loan as income. So you really don't even have to come up with that much of a down payment depending on what kind of loan structure you have. And Warren Buffett has this quote, when there's blood in the streets, which I know is a little crass, it's time to make a move. And we know the real estate market has started to decline a bit in certain areas. Yeah. And the rental markets are still super hot, especially here in the Chicagoland area. The rental market has gone up 20.8% year over year, which is tremendous amounts. So if you're looking to invest in multifamily units, honestly, I believe truly that now is a great time.
Wealth is made in downturns. That's what they say,
100%.
Right? That's the quote. So if you're sitting there and you're saying, I am pessimistic about the real estate market, why are these people telling me that it's time to invest? Well, that's the reason. If you're pessimistic in the real estate market, that means you think we're in a downturn. Now is the time actually to invest because that's when wealth is made in 5 to 7 years. You're the one seeing those returns versus somebody else.
Absolutely. People always need someplace to live, and our population is not declining. Yeah. It's going up. So, great time, right? The number one rule, make sure you invest in a great area where you can easily rent those units. And Absolutely. A metropolitan area like Chicago is a hot market, always.
Yeah, no question. All right, so let's say, okay, we've talked you into it, and you're saying, this makes sense to me. I think I do want to think about getting into an investment property, a multifamily unit. There are some things to think about on the financial side that you maybe want to have in the back of your mind as you're planning this. Because look, some of you out there may have a couple $1 million in your pocket just burning a hole and you can just drop it down. And you know what? If you do, good for you.
Good for you.
I'm proud of you. That's a good move. But for the rest of us, you're probably going to be taking on a loan and that's perfectly normal. That's okay. There are a lot of things to think about as you're planning financially what makes sense as far as an investment property goes. But there are a couple of things to kind of keep in mind with interest rates as high as they are as you're looking to borrow money. One of the things to think about is right now you may have to come up with more capital initially if you're not living in the unit, right. If it's just a pure investment, than you would have in other times. So when interest rates are low, you might be looking at being able to get into an investment property with 25% down. It may be more than that right now, so that's something to kind of keep in the back of your mind. Another thing to keep in the back of your mind is that higher interest rates, the money that you're paying to borrow the money, that obviously affects the profitability of the investment itself. Now, I'm not going to get too far in the weeds here because that's not the kind of video that this is.
Which we can do if you want. Just let us know. We're just trying to make this more high level.
We don't want you clicking away. But basically the bottom line here is for those of you that have worked with investment properties at all before, you know the thing that people always talk about is the capitalization rate. And basically, just at a very surface level, that has to do with both the money coming in and also the value of the property. And it estimates kind of risk and as far as profitability and things like that. But what it doesn't take into account is what you owe and what you're paying to borrow that money, right? So
that's a separate analysis that you have to do. So the cap rates don't take all of that into consideration.
Exactly. So let's say, for example, that you find a building that has a capitalization rate of 5%. You're like, great. If your interest rate on your loan is 6%, right. Now that's not a great situation to be in. But there's good news here. There are a couple of ways that you can approach this that might change your numbers a little bit and make it make more sense. The first is, and as Vittoria alluded to, right now you may be able to purchase that property for less than you would have when the market was screaming hot.
Right.
So obviously there's less debt that you have to take on to make that purchase. So that's number one.
Yeah, we're finding in Chicagoland, like you don't have to pay full price for a multi-unit. In the analysis we've done, you can maybe get it for 5, maybe 10% less than what it's listed for. So something to consider.
Absolutely. Now the other thing, and we talked about this as well, is as rents go up, that means your operating income is going up. And that changes the capitalization rate. So as you're looking at the properties, remember that some of this is a lagging indicator. And what I mean by
100%.
that is that the numbers that you're seeing for actual rents today doesn't necessarily reflect what rents will be tomorrow. And as rents are rising, that may allow you to project for more income than what you're seeing currently, and that changes the equation as well.
And also some of the rents that are shown in these capitalization rates and in general in the MLS are, again, rents from people who have a lease from a year ago or 9 months ago. So that's not taking into consideration any increases, and some of them might be below market value.
Yeah, and actually we're often seeing that because some of what we're seeing is still a reflection of what we saw during the pandemic.
Yes.
And now we're coming out of that, and things are obviously changing. So that's something to keep in mind as well.
Right, absolutely. So it's important to keep a lot of things in mind, how you're going to finance the building, hard money, soft money. If the building needs a lot of work, or it's turnkey and ready to go, so you have to have some money in reserves. Really important to buy every investment property that you have in an LLC to protect yourself, so you have to have that set up ahead of time. And then taking your profits, honestly, and putting them in a separate bank account, having a separate bank account for every single building. Profits go into that account, and you draw from that account to make improvements or if something breaks. And then eventually, this is the key, right? When you have a nice nest egg build up, you take out the profits and you go and you invest in another property, right? So that's really how you can build wealth over the years.
We're working on the 10 and 20 year plan for you right now.
Right.
So just so you know.
It's like your mini 401k, so maybe you can retire at 45.
So the bottom line is there are obviously a lot of things to think about, and we're not trying to pretend that this is
or minimize how complicated it is, because it is complicated.
But what we are saying is that this might be the perfect time to think about moving this direction, especially if you've been thinking about diversifying how you're investing, or just looking for an opportunity to get into the real estate investment markets. So I know a lot of people kind of always think about that, but it's really sometimes hard to decide to take the plunge, and so we're sort of here to kind of guide you if you're ready to make a move in that direction.
Well, and that's what's so important, is having your team set up, right? You want to make sure that you're working with a very reputable and knowledgeable broker that you can trust and to help you pull those numbers, and then also a lender if that's the route you need to go, because there's a lot of different ways to finance these properties, and so having your team in place to help you make these decisions and find the perfect property, which you can't time the market. We know this, right? What's going to happen is it's going to be the right time for you.
Right.
You're going to identify the property in the right neighborhood that you want to buy, and you're going to have everything in place. And it might take 6 months, a year. It might not be immediate, right? So it's really important to have your team in place. Do your due diligence, do your homework, so that when that property hits the market, you're ready to go.
Because you can't time the market, but what you can do is know what type of investment you're looking for and find the right people to help identify that so that you're ready to pounce when it comes around.
Right, and in fact, even in the multi-family, multi-unit, there's still lots of private pocket listings that we're seeing. We're working with a client right now where we've been able to show him a couple that have not even hit the market yet. So it's really important to identify the team that you want to work with to help you make this very important decision.
All right, so hopefully that all makes sense. If it doesn't, reach out, talk to us, ask us questions. And what we'd like to know from you is if you've thought about getting into the real estate investment game and you haven't, why not? Or
what's holding you back?
Exactly. What are the things that have sort of kept you from taking the plunge? We'd love to know.
We'd love to hear.
And obviously, please chat about anything. We'll chat about whatever you want.
Any questions you might have regarding real estate, just send us an email or DM, and we're happy to make a video about it and answer all your questions.